I've put together a presentation according to the request from our organizers about telematics and especially developments in the automotive claims industry. I've also prepared a short SCHLAEGER AUDATEX movie after my presentation where you can see in which areas we also work a lot and develop a lot inside our company. To kick off my presentation, let me ask you if you have any clue what P-A-Y-D or P-H-Y-D or U-B-I-D means. Has anyone a clue? Have you ever heard one of these expressions? Okay, to give the resolution to the riddle, P-A-Y-D means pay as you drive. P-H-Y-D means pay how you drive. And UBI means usage-based insurance. These three acronyms will come back in my presentation a couple of times because they are very important regarding telematics. Let me now guide you to the cars connected and future opportunities. Connected cars, you've heard a lot about this, maybe especially in the BMW advertisements with Connect car of BMW, the i3 and the i8. They are doing a lot of PR for these cars right now. Connected cars in the future will be very, very disruptive to the automotive and insurance industry. If you look to the gray boxes, of course you have navigation systems in the car, you have real-time traffic information in the car, you have driver comfort systems in the car, you have, of course, telephone and internet access. But there's a lot of challenges in the future about active safety, vision enhancement, collision information, adaptive cruise controls, and so on and so forth. There's also challenges regarding diagnostics, regarding drive behavior and analysis information, which are very, very important in the future for insurance companies. I will come back to this later. And of course, there's a lot of vehicle diagnostics going on in the car. In modern advanced cars, you have a diagnostic system where you simply press a button, you get information about the oil, about the tire pressure, about any system working or not working in your car. And of course, many cars already have collision notification systems. Let me give you some numbers about the developments of connected cars in the future. 210 million connected cars will be in the road in 2016, which is only 1.5 years away from now. If you look to the compounded annual growth rates in the various regions of the world, going from Canada, there will be a growth rate of 25%. The US even higher with 29%. If you come to Western Europe, it will raise from 6.5 million to 48 million connected cars, which is a growth rate of 49, almost 50%. Even in Eastern Europe, we will see a growth rate of about 50%. Asia is slightly lower with 33%, but this is also due to the fact that the car population in many Asian countries, like Indonesia, like Malaysia, is not very high, like Thailand. Going to South America, the growth rate is almost close to 50% with 44. And in the Middle East and Africa, of course, it's quite lower. It's about 35%. And the cars will raise from 2 to 9 million. There's a very important EU market challenge, the so-called e-call system. This means there is an EU regulation that cars have to have an e-call on-board system in all new cars by 2015. So every manufacturer who wants to sell a new car after 2015 in the European Union has to have a mandatory provision in his IT infrastructure for collecting the data. The device needs to contain a GMS module and a GPS or Galileo chipset, and we will move towards an in-vehicle integration, driving the value of this market to a multi-billion euro market. What does it mean? In case of an accident, in case of a collision, this e-call system has to transmit a minimum set of data, which is vehicle identification, which car is involved in the collision, the time of the collision, the GPS positioning, the exact position where the collision happened, the driving direction, the eCall status, and the type of motoring. Without this minimum data set, no manufacturer will be able to sell a new car after 2015 anymore. This is law. This is going to be a law by the European Union. Let me briefly touch upon the current market situation and challenges. For the time being, on the left-hand side, the OEMs, the manufacturers, are focusing their efforts on avoiding accidents. Active safety is priority. Consumers prefer safe cars. And of course, the number of accidents will decrease in the future. To the left bottom, you see that Volvo intends to have no personal injuries after 2020 anymore in their cars. Their cars shall be developed in a way that personal injuries will not happen anymore in these cars. If you look to the right side, you see that almost all big manufacturers, if it's Volvo, if it's Mercedes, Audi, Volkswagen, all have their systems already built in the cars to avoid accidents as good as possible, as well as possible, using brake systems. And what is hardly readable, let me just explain to you, is a very, very interesting milestone overview from ADAC regarding active security. The ABS was introduced in the late 70s. Traction control systems were introduced in the early 80s. The ESP, tire pressure control, lane assistant, brake assistant, secondary collision mitigation, all this was introduced in a time span of less than 10 years. So the development has increased substantially over time regarding security in cars. Telematics will also offer a huge opportunity regarding fraud. If you look to fraud, insurers and consumers are facing increased costs due to fraud everywhere. It says 6 billion in excess payments. It says 350 million fraud annually. Every insurance claim is almost 3% fraudulent. And Allianz says that the entire portfolio, if you go to the left bottom of the chart, Allianz says the entire portfolio of their own is 10% fraudulent. But we have a special speech on this, so I will later hand over to you, Letha. Market opportunities largely regard the driver behavior and the risk profile. If you look to the current market, it's all mileage-based and simply event-based, usage-based insurance. Pay as you drive is the name of the game today. It's discount-driven. Premiums are based on very simple patterns. Payment for risk profile only happens on a large pool of drivers, not individualized. And privacy concerns only for customers. Emerging practices see that usage-based insurance value only for insurances. Value will be linked to pricing very clearly. Technology will be plugged in. The focus will clearly be on costs. And the communication only card to back end. In the longer term, the goal will be the game changer in a way that pay how you drive will be the name of the game. There will be usage-based insurance value for both insurers and customers. Premiums will be based on actual driving risk. Consumers will prioritize saving to privacy. In other words, it's not so important for them anymore not to be known by their insurance with their driver behavior, but to be known in order to save money, substantial money. There will be a focus on profitability on both sides, and of course there will be a lot of technology built in. I refer to the eCall system, which I've just presented. How does a basic telematics system architecture look like? You start with the sensors on board, sending signals and data over cellular networks in real time. This all happens in the moment of the collision. Servers will receive the data and process it. There will then happen a scoring, and web-based software will offer detailed insight in the behavior of the car driver. The system will be able to tell you how many kilometers you drive, how fast you drive, how fast or how slow you accelerate, how many unnecessary brakes you produce. They will even be able to know and understand how many red lights you miss. And of course, all data about collision will be stored. And all this will be summarized in a constructive feedback and will help define proper premiums. Let me give you a high-level overview on the usage-based insurance. There's a lot of customer feedback and input in the time of underwriting. And as you've seen on this chart, all data will be stored. And here the customer will also give feedback. And all this will be matched with the company feedback to have a vehicle score with the VIN, the miles driven, event per mile, and so on and so forth, as I've already lined out. The current market and future challenges. In the past, the model was, as mentioned, pay as you drive. Regarding technology, vehicles should be safe to drive and protect passengers in the case of a crash. Of course, there were advanced driving assistance systems. Premiums were based on simple patterns, as mentioned, basically distance and time of the day. Payment for risk profiles was only done on a larger pool of drivers. So it was all orientated regarding group behavior, not individual behavior. In the future, it will be usage-based insurance and pay how you drive, not anymore pay as you drive. And there will be fraud and leakage claims detection. Regarding technology, there will be preventing crashes more important than just assisting to brake safely. I come back to the statement of Volvo. By 2020, we do not want to have any personal injuries in our cars anymore. And of course, driving behavior is the key factor in crashes. Technology will help to be immediately alerted in case of an incident, so saving preferences will also be a very important driver for the insured compared to privacy concerns in the past. New risk algorithms will be able to better calibrate premiums. Observing specific customer drive patterns is very important, as said. Pricing premiums will be based on the actual risk profile and not anymore on the profile of a pool. Detecting fraudulent claims made by customers will be very easy. And of course, in the moment of the accident, everyone will be alerted. This will lead to a very personalized risk profile in the future. The impact on vehicle connectivity on insurance claims, just to give some numbers we have collected. The usage behavior, moving from usage-based insurance to pay how you drive, will have an impact of 10 to 30% on premiums. Cash prevention, vehicle health monitoring and maintenance, and driver vitals monitoring will lead up to 20 to 35% reducing in crashes. If you get fast and correct responses with the e-call system, for instance, and the black boxes being installed in future cars, 5 to 15% of savings will be able to be realized. Claims and cost containment, a reduction of survey and investigation costs, for instance, fraud prevention, stolen vehicle tracking, and all the networks being connected will result in a saving of 30 to 80% for insurance companies. And connected law enforcement, pay as you need, virtual violation detection, for instance, automated payment, will end up in 20 to 30% savings. Part of these numbers are taken from a company you have recently acquired in the United States, and they do monitor private drivers' behaviors. They have a database about all the fines, all the police interventions of an individual driver. And this information, of course, is very, very valuable to governments and also insurance companies. Let me give you some more numbers. Annual benefits per connected passenger cars by source. So about 100 out of $1,400, new profit pools come to $100, point of interest, location-based services and car sharing. The manufacturers, the OEMs, can decrease electronic vehicle architecture complexity and cost by about 180 per car, and improve service retention and warranty costs by about 280, so reduction of 280. Car insurers will be able to reduce the cost by 380, avoiding crashes and associated societal costs. And governments will be even able to reduce costs by $430 by lower fuel usage, emissions, and congestions reductions. Giving some concrete feedback about companies that have implemented usage-based insurance and monitored the driving behaviors afterwards. The Iron Mountain company, for instance, has realized a reduction of 93% in fleet crash rates. The Iceland Postal Service has reduced the overall crash rate by 56%. Pepsi Iceland reduced the fleet crashes by over 80%. Green Road has a 54 improvement rate in fleet crash, and DriveCam reduced on an average 50% of the crash rates. And going to the UK, the Box company has a reduction of 35 to 40% in, very important, youthful crash rates. So young people in this case. And also very important information we've collected, safer drivers decrease fuel consumption roughly by 10%, applying nothing else but safe driving. So, to summarize, UBI, usage-based insurance is involving. UBI 1.0 brings value for insurance companies only, linked to pricing, is related only to auto insurance ecosystems. Technology is plugged into mobile systems, focuses clearly on costs, and communication is only from car to backend. Versus UBI 2.0 will bring value for both parties, for insurance carriers, consumers, and their partners. It's linked clearly to pricing, so you can have substantial decreases in your premiums. Technology becomes widely and largely distributed, plugged in, brought in, built in, beamed in, everywhere. And the focus will clearly lie on profitability over time. And last but not least, there's a two-way in-vehicle communication. I refer again to the ecosystem. So coming to my last chart before we show this short movie about further developments of Solera and AUDATEX, do you know now what PAYD means, PHYD and UBI means? If I've managed to accomplish this task, then my presentation was okay. I thank you very much for your attention, mulțumesc, and allow me now to show this short movie.
right, partial paint, work units 2. Rear fender, right, repair, work units 12, repaint, work units 5.
Release 2 screws.
Next step.
Remove intake duct.
Next step.
Unclip plug.